Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, the US dollar is dumping after the latest Fed meeting, which is actually bullish for Bitcoin and crypto. So I'll be talking about that in just a moment, alongside Ethereum now playing out the short-term bullish signal, which I'll talk about later in the video. So make sure to watch to the end. First of all, in case you missed it, the Federal Reserve, or FOMC, decided to keep interest rates the same at the latest FOMC meeting, which was the expected outcome. And so, as always, as soon as that news dropped, I made sure to tweet it out over on my Twitter in real time. So if you want those real-time updates, then once again, make sure to follow me over on my Twitter, link down below in the description and in the pinned comment. But basically, as soon as this information came out, once again, that was relatively neutral for the market. We didn't really see any major move in the market, just in the short term when that news came out. But what we also saw from the Federal Reserve was a new forecast directly from the Fed. Basically, the Federal Reserve is now forecasting 75 basis points worth of rate cuts in 2024. So that is 325 basis point cuts next year. And previously, the Federal Reserve, specifically Jerome Powell, was not really talking about rate cuts at all. And previously, they were talking about maybe 1 or 2 rate cuts in 2024, but now they're talking about potentially 3 rate cuts. Once again, 75 basis points worth of rate cuts next year. And as I explained in more detail around 2 videos ago here on the channel, rate cuts and lower interest rates are actually bullish for the markets. And now there's some people out there that are a little bit confused about rate cuts being bullish, because oftentimes we do end up seeing rate cuts around market crashes, like for example in the .com crash or the 2008 crash. But it is important to understand that correlation does not equal causation. So of course, those crashes back then were definitely not caused by rate cuts. They were caused by other factors. And in fact, those collapses back in 2008, for example, or the .com crash, probably would have been a lot worse without the rate cuts. And so essentially, rate cuts are always a bullish force. It's just oftentimes we usually see those rate cuts deployed when the markets are looking very weak. But of course, right now, we are expecting rate cuts next year. Either way, whether markets are bullish or bearish, either way, we're expecting rate cuts. And so once again, this is a bullish indicator for the markets. Rate cuts is bullish, and we would only be bearish due to another factor, not the rate cuts. And now, even though the Federal Reserve is forecasting 3 rate cuts next year, once again 75 basis points worth of rate cuts in 2024, the futures market is actually expecting potentially more rate cuts than just 3. Because at least as of right now, the market is currently expecting for the Federal Reserve to keep interest rates where they are right now for the next Fed meeting, which is at the end of January, so in about a month and a half. Once again, at that next Fed meeting, we're expecting the Federal Reserve to keep interest rates where they are right now for one more Fed meeting. But then the Fed meeting after that, which is in March next year, the market is currently expecting the first rate cut to potentially occur in the March Fed meeting. And then following the March Fed meeting, we have the May Fed meeting, where the market is also expecting another 25 basis point rate cut, and then another 25 basis point rate cut in the June Fed meeting. And then the market is expecting another 25 basis point rate cut in the July Fed meeting, another 25 basis point rate cut in the September Fed meeting, and potentially another 25 basis point rate cut sometime later in 2024, either in November or December. But either way, whether we see all of these rate cuts that the markets are potentially expecting right now, or if we see the Federal Reserve forecast play out with just the 3 rate cuts next year, either way, it's safe to say that it's very likely, it's almost certain at this point, that we're going to see interest rates go back to the downside during 2024. We're going to see rate cuts during next year. And the last time where we saw a lot of rate cuts at the same time as a Bitcoin halving was, of course, in 2020. Obviously, back in 2020, the Federal Reserve dropped interest rates a lot. And also in 2020, we had the previous Bitcoin halving. And obviously, you all know what happened in the second half of 2020 and leading into 2021, we had a major bull market. And so once again, multiple fundamental and macro factors are all lining up towards potentially another massive bull market happening over the next 1 to 2 years or so, with the Bitcoin halving, rate cut, and also spot Bitcoin ETFs also on the horizon. And so essentially, with any decent dip in the price of Bitcoin, at least personally, I am using that as a buying opportunity just to buy as much Bitcoin as I can and hold for the next 1 to 2 years at least. But as always, that is not personal financial advice. I'm just letting you know what I am doing with my personal strategy. And so, of course, once again, with this bullish news, which I tweeted out over on my Twitter in real time as soon as this bullish news came out. Just after that, we did end up seeing the DXY initially lose value. Because once again, as I've explained recently on the channel, if US interest rates decline, that actually decreases the amount of demand for US dollars. Because essentially, in order to access those US interest rates, whether it's via US bank accounts or US treasuries, you essentially need US dollars in order to access those interest rates. But for example, if interest rates within the US decline while interest rates remain high elsewhere, for example, in Europe or Australia or other countries, of course, investors would just move their money out of the US and into wherever the interest rates are higher to get a better return. And so that essentially means dumping US dollars and buying another currency in order to get a better yield on that currency. And so once again, if US interest rates decline, that basically decreases the DXY or US dollars value relative to other fiat currencies. And once again, if the DXY is declining, that is a bullish signal for markets like the stock market and especially the crypto market, as we can see here in the price of Bitcoin. Pretty much all the time, not all the time, but almost all the time, when the DXY is in a bearish trend, that is bullish for Bitcoin, and vice versa. If the DXY is bullish, that is usually bearish for Bitcoin. And so once again, with the Federal Reserve hinting at more rate cuts to come in 2024 than previously anticipated, that means the US dollar is losing value, which means Bitcoin and other crypto assets are gaining value. And if you're enjoying this video so far, make sure to hit the like button down below and subscribe to the channel if you are new, if you want to see more videos just like this one. But anyway, getting into some other Bitcoin charts, taking a look at this daily Bitcoin chart, and technically speaking, we still have this bearish divergence, which is still currently active on the daily time frame. And so once again, while this bearish divergence is active, this means we're due to see reduced bullish momentum, at least in the somewhat short term, which can play out in the form of either a sideways consolidation with a lot of choppy sideways price action, or potentially a bit more of a pullback within the next few weeks or so. And obviously, ever since this bearish divergence confirmed, we have been seeing a lot of choppy sideways price action with a move first to the downside and now back to the upside, at least in the short term here. But remember, this does not necessarily cancel the bullish trend. We can still remain within the bullish trend. We're simply just potentially taking a pause from the bullish trend before we could potentially continue the bullish trend later on. It's just that right now on the daily time frame, in the somewhat short term here, we're basically lacking that extreme bullish momentum that we saw back here, for example. And if you're taking a look at the 8-hour Bitcoin chart, once again, we saw a perfect bounce from this exact line of support, which was previous resistance. And this line of support is sitting at around 40.3k to 40.4k. And in fact, over the last few days, we've seen multiple bounces, around 3 different bounces from this exact line of support, which was 3 potential buying opportunities if you're buying at support. And as for some other short-term support and resistance levels, looking at the 2-hour Bitcoin chart at the Fibonacci retracement tool from this swing high down to this swing low just in the short term, this places the golden pocket in between around 42.9k going up towards around 43.1k. The next short-term resistance is sitting at around 43.6k to 43.7k, and above that, once again, we have more resistance closer towards the local highs at around 44.5 to 44.7k. And as for short-term support levels, once again, we could now find some support around this golden pocket, but if we see a breakback below around 42.9k, then in that case, the next short-term support is sitting at around 42.4k, around 41.9k, and some more support at around 41.2 to 41.3k. And if you want to take advantage of this short-term volatility, whether you think the price is going down or up, you can profit in either of those scenarios with short positions and long positions. And personally, I trade over on Bybit. And so as always, I'll make sure to leave a link to Bybit in the description down below and in the pinned comment. And in fact, if you use that link to make a Bybit account, you can claim up to a $30,000 deposit bonus, but only if you use that link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And in fact, if you use the link down below to make a Bitflex account and deposit $100 worth of crypto and to make one trade on Bitflex, that can get you 10 USDT completely for free. And so once again, if you're trading crypto anyway, or if you're preparing to take the next trade, then you might as well set up ready to go with one of those accounts if you want to claim those extra bonuses. But anyway, taking a quick look at the Bitcoin liquidation heat map, and of course, as I said in my last video, though, we did have a lot of liquidations sitting at around 40.5k. And obviously, recently, around a day ago, we did see the price get very close to that liquidation level, but we did not quite hit that liquidation level because, of course, once again, when the Fed meeting happened and when that new bullish news dropped, which I shared over on my Twitter in real time, of course, the market just continued to the upside just in the short term. But at least for now, that liquidity at around 40,500 is still there, which basically means if we do end up seeing another short-term pullback, that could be a potential target to the downside if we start breaking below some of these levels of support. And speaking of breaking support levels, looking at the Bitcoin dominance on the weekly time frame, because right now the Bitcoin dominance is actually testing a very important line of support and very close to potentially breaking that trend line of support. Because ever since around the beginning of this year, even late 2022, of course, the Bitcoin dominance here on the weekly time frame has been trending to the upside. And so far, we've seen multiple almost perfect bounces from this exact line of support right here, which is currently sitting at around 53% Bitcoin dominance. And so basically, if we end up seeing the Bitcoin dominance bounce again and this line and continue further to the upside in this bullish trend, that basically means Bitcoin is likely going to continue outperforming a lot of the altcoin market. And now, of course, you'll notice I said a lot of the altcoin market, not every single altcoin, because obviously there are some altcoins out there doing very well, a lot better than Bitcoin at the moment. But once again, when the Bitcoin dominance is bullish, that just means Bitcoin is doing better than most of the crypto market. But when we eventually see a reversal here in the Bitcoin dominance with a break below this line right here, then that could potentially lead to an altcoin season, because of course, when the Bitcoin dominance is pulling back or even crashing, that basically means the altcoin market is rapidly outperforming Bitcoin. So during these crazy altcoin seasons just here, we see massive gains in the altcoin market. And so even though we have seen some crazy altcoin gains just recently over the last few weeks or months, of course, that is nothing compared to what we could see in an actual altcoin season once the Bitcoin dominance begins breaking to the downside. And once we actually do see some more confirmation of the Bitcoin dominance beginning to break to the downside and possibly entering into an altcoin season, of course, I'll make sure to cover more altcoin content here on the channel, because that is where a lot of the opportunity will be when the Bitcoin dominance eventually reverses. But at least for now, we do not have confirmation of a bearish reversal in the Bitcoin dominance, which means once again, at least for now, the Bitcoin dominance is still currently within the bullish trend on the weekly time frame. But anyway, getting into the Ethereum part of this video, this is on the weekly ETH to US dollar chart, and just recently we've seen a perfect retest in the price of ETH to this previous resistance level, which was sitting at around 2150 if you're looking at the top side of this area of resistance. And as always, if we flip previous resistance into new support with a successful retest and bounce, once again, that is bullish price structure. Obviously, price structure heading in the bullish direction, further confirming the breakout to the upside. And so due to the fact that this breakout is still currently active, of course, this means we still have an active price target for this massive ascending triangle pattern, which is sitting at around 4.3k. And so from where we are right now as of recording this video to that technical price target, that is nearly a 90% move in the price of ETH to the upside without any leverage. And so most likely at some point next year, some point during 2024, we could end up seeing the price of ETH hit around 4.3k or potentially even higher. But once again, that is now a technical price target, which is active. But remember, considering this is on the weekly time frame, each one of these candles is an entire week. Obviously, I don't expect the price to get there next week or even next month. It's going to take some time. And also, I would not expect the price to go there in one straight line. Obviously, it's very likely we're going to see some pullbacks along the way. But at least for now, once again, on the larger timeframes, we are still currently trending in the bullish direction. But if we're taking a look at the daily ETH to US dollar chart, once again, we technically have a bearish divergence, which is still active here on the daily time frame. And so once again, this bearish divergence means that we're due to see reduced bullish momentum, at least in the somewhat short term here, which could potentially last for a couple of weeks. And so once again, this usually plays out in the form of either choppy sideways price action or potentially a bit more of a pullback, once again, within the next few weeks or so. But remember, it's possible we could just see a pause or setback from this bullish trend before continuing the bullish trend later on. That's always a possibility. And at least for now, we have found some major support at this previous area of resistance, which here on the daily chart is sitting in between around 2.1k going up towards around 2150. Once again, we have major support in that range. And as for other support levels here on the 8-hour time frame, looking at the Fibonacci retracement tool, once again, we have support support at around 2150, but below that level, we have more support at around 2010 to 2020, and below that, we have even more support at around 1910. And as for short-term levels, taking a look at the 2-hour time frame, we did have a bit of short-term resistance just here, which was sitting at around 2230 to 2240. But obviously, over the last 1 day or so, with that latest Fed meeting having bullish news, of course, we broke out to the upside in the short term above this resistance, and also because we had a bullish signal active on the chart. And so, like I said yesterday, right down here at this local low, we do now have an active bullish divergence, meaning we're due to see potentially a bullish relief in the short term. And obviously, that is exactly what we have seen over the last 1 day. So if you took a short-term trade at this bullish divergence, obviously you've done very well. But at least for now, the 2-hour Ethereum RSI is brushing against oversold territories, which could be a short-term local high, basically meaning we have somewhat limited room to the upside in the immediate short term. Remember, we're only on the 2-hour chart. And as for some other short-term support and resistance levels, taking a look at the Fibonacci retracement tool on the 2-hour time frame, right now, as of recording this video, the price of ETH is actually rejecting from the golden pocket, sitting in between around 2.3k to around 2310. And so at least in the short term, that is the resistance to pay attention to. But if we end up seeing a confirmed breakout above around 2310, then in that case, the next resistance is at around 2340 to 2350. And above that, we have more resistance at the local highs, sitting closer towards around 2.4k. And as for short-term support, we could find some support at around 2270, but below that, we have a lot more support at around 2230 to 2240, which will support back here and a resistance just here. But once again, even though we are playing out a short-term bullish divergence on the 2-hour chart in the form of a bullish relief, once again, we still have an active bearish divergence on the daily time frame. And so potentially this short-term bullish relief could simply be forming a larger sideways consolidation here on the larger time frames like the daily chart. But once again, if you zoom further out, if you're looking at the weekly chart, that sideways consolidation could just be a brief pause within the larger bullish trend here on the weekly time frame. And so as always, it is important to understand the difference between the different time frames, because obviously we could be more bullish or more bearish depending on the time frame. But believe it or not, you can make money in crypto no matter if the price is bullish, bearish, or simply chopping around sideways. And if you want to know how you can do that, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is bullish or bearish with longs and shorts, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.